prime. But now, in today's market, it would be considered subprime. Well, why is it called A then? A borrower.
Alternate.
Okay, income used in calculating the housing and debt-to-income ratio is income expected to continue for at least 1 year, income received for at least 1 year, stable income, or net taxable income. Stability.
I just
Like 2
don't have
years,
the
stable
answer.
income.
Because the answer is 2 years. Since 2 years is not.
Job stability and income stability, right?
In the loan application process, which of the following documents refers to a shopping chart?
GFE.
Could be.
Okay, let's see. I don't think there's anything such thing as a HUD 1A. Let's see, GFE till HUD 1. The answer is the GFE. Okay, GFE shopping.
Shopping chart.
Okay. Truth in Lending. The Truth in Lending Act, not the form, the Act is designed to protect consumers in property evaluation, property offers, credit transaction, or real estate practices. This is tricky.
Credit
Careful.
transaction.
Alright, check it out.
Credit transaction.
Okay. What if there was another answer that says property transaction? Okay, so remember, Truth in Lending is associated with credit. Okay, it deals with all types of credit, not just mortgage credit. Okay, so always associate in your brain Truth in Lending, credit. Okay, including credit cards. Fannie Mae appraisal guidelines provide that net adjustments, this is very similar, should not exceed 25, 15, or 10% of the sales price, or 50 grand. Okay, the other one was the other question was, what is the variance allowed? And the answer was 20%. This one is saying, what is the adjustments on the appraisal report? Okay, I'll give you a clue. It's a percentage. There's more percentage answers. Okay. The answer is 15%. Okay, that's just something you have to memorize. 15% of the sales price.
If they ask you for the gross, it's 25.
The gross amount is
The
25,000.
gross adjustment is 25.
Okay. Gross adjustment is 25,000.
35%.
35?
25%.
25. Okay. 25 gross. 25 gross, net is 15. Okay, got that?
25%.
Write that down.
Write that down. 25% is the gross and 15% is the net. Okay.
Gross 35 net 29.
What is a characteristic of a jumbo non-conforming loan?
729.
Okay, a loan amount over 729, a loan amount over 625, 500, high balance loan. This is a trick question. What is a high balance loan?
What is a high balance loan?
We covered that in the beginning.
Could be anything. Yeah.
Over 729.
Okay, high balance is from 417,001 to 729. Okay, that's a high balance loan.
So that's what
So the correct answer is a jumbo non-conforming. Okay, non-conforming means not high balance and not conforming. The answer is if it's a loan amount over 729, 750. Okay,
We also call it true jumbo.
true jumbo. I call it jumbo jumbo.
But if there is 417 above, are we going to choose 417?
That's also non-conforming loan, but not jumbo.
Yeah, a 417 loan. Okay, let me change your question. What if it's 420,000? What is it called? It's called a high balance loan. What if it's 416? It's called a conforming loan. Okay, does that make
It's
sense?
below 417.
Yeah, exactly. There's 3 brackets.
And what's the 625?
625 is the actual temporary actual conforming.
Temporary.
Actually, not the temporary. The actual
Actual jumbo.
conforming limits. High balance conforming limits. Yep.
Actual high balance.
Actual high balance.
Because the 729 is only going to be until the end of this year. After that, most likely they're not going to extend it. They'll be extended once.
So
What
back
is
to
it
the
again?
620.
What did you say?
The temporary ARRA high balance loan, pretty much, that's what it's called. 729, 750. It's going to expire this December.
Is this
So January 1st, it's gone for pretty much. They're not going to extend it anymore. I think it's
Right.
jumbo.
So there's your chart right there.
Conforming jumbo.
0 to 470 is conforming. 476.25 is high balance. Temporary high balance until the end of the year. Okay. And 729 is jumbo. Okay. That's the chart. Under the Graham-Leach-Bliley Act. Okay. How many people know this? I don't know it. A person is considered a consumer of a financial institution when the person is a beneficiary of an employee benefit plan for which the financial institution acts as a fiduciary, obtains credit from the financial institution for personal reasons, names the financial institution as a trustee of a trust, or is a consumer of another financial institution receiving services from this financial institution.
Number 2.
B.
Obtains credit from the financial institution for personal reasons. Okay. Cost of a loan is shown as an % rate in the ECOA, CHARM, TIL, GFE. TIL. Okay. You will get duplicate questions like that. R is a licensed mortgage broker. I guess that's me. He wants to call former clients for referrals. He can contact them even if they are on a federal do not call list for up to how many months? 3, 6? I don't know. 18 months. Okay. So do not call list exception 18 months. Former client. What methods are not allowed? This is different than the other question which says which methods are allowed, email, fax. So, but it's very similar. Is poster in big letters at an odd location, hand delivered to borrower, provide written application, provide signing. The answer is A. Poster in big letters at in an odd location. RESPA administered by HUD, correct. Okay, same question, 6 months. 6 months PITI, which we're going to check on. Okay, when a telemarketer marketer calls a person on the do not call list in violation of the do not call regulations, he is subject to a fine of $7,500, $16,500, or $12,000. $16,000. Wow. Yeah.
Because different books says different. Some of the books says 11,000.
Yeah.
So now it's 16.
Which of the following is the cost of having an impound account? We already covered that already. Escrow waiver fee. Okay, this is an actual question too. Borrowers are buying a $100,000 house. Seller agrees to credit up to 3% of the closing cost. How much is 3%? 3% is $3,000. The closing costs are $3,500. How much can be credited? Okay, is $3,000?
Yeah.
Is it all non-recurring closing costs? Is it all non-recurring closing costs and recurring closing costs? Or is it $3,500? This is another trick question. The actual how much is allowed to be credited can be all NRCCs. It can be up to 6%. But in this situation, the seller only agreed to credit up to 3%.
3%, so that's 3,000.
The answer is only 3,000.
All the other information is
Yeah, it's a tricky question, but it's actual. As the deadline approaches for the closing date established in the buyer's sale agreement, his purchase contract, the buyer's loan application, 1003, has not yet been approved, but appears to be headed for approval. The loan originator should A. Tell the buyer he can have his application acted on sooner if he pays additional points. Tell the buyer his application will not be approved. That does not make sense. Notify the real estate broker to try to get an extension of the closing deadline. Or tell the buyer his application has been approved. Okay, it's a purchase deal, so it's asking behavior, and I guess technically, because it's so close, Fannie Mae requires that borrowers maintain property insurance. I'll let Lana answer this question again. On Adrian's last insurance, Fannie Mae requires how much property insurance? Loan amount, lesser of the insured value, purchase price, greater than insured value. Do you insure improvements? Do you insure improvements in the property? Yeah.
We do, but I would say that they always want the loan amount, but we always do whatever
The loan amount.
the actual value is.
Well, also the improvements.
You cover the improvements, right? You don't. We don't.
The
Build
loan
and they shall.
amount. Purchase. This is the loan amount. The
They're
loan
required.
amount.
It's B or D. The answer is the lesser of the insurable value of the improvements or the loan balance.
And the reasoning behind that?
I don't understand that.
So the reasoning behind that is the lender, all they care about is to get their money back,
Right.
right? So if you can rebuild the house back to its current form, they're fine with it. If you only can cover your loan amount, they're fine with it too,
Ah, okay.
right? So whichever is lesser.
So,
The lesser of the insurable value.
okay.
And the
Yeah.
key word is all they get their money back.
Yes, pretty much. That's all they care
Possibly because there's a clause in the insurance that says guaranteed replacement coverage, right? Or extended replacement coverage, which will cover the improvements.
about. They can only cover the improvements because they cannot cover the land, pretty much.
The land's
So
weird.
they can only cover the improvements of the land.
That's tricky.
Yes. They're trying
This is
to
a tricky
trick you
twist.
into the loan balance there.
Which federal agency administers Regulation B, implementing ECOA, that's how you pronounce it, which stands for Equal Credit Opportunity Act. Regulation C, implementing HMDA, or Regulation Z, implementing TILA. Okay? A lot of acronyms here. I mean, Federal Reserve Board, Federal Trade Commission, Department of Justice, or Department of Housing and Urban Development. The answer is the Federal Reserve Board. Okay. Anytime you deal with Regulation Z,
The
you deal.
enforcement is FTC. The one who
FTC,
actually
the enforcer.
administers it is the Federal Reserve Board, right? So this is a very tricky question.
Okay. Let me see.
Okay, remember.
So the administration part is the answer.
Yes, and
So
it
that's
will be
Federal
enforced
Reserve?
by
It's Federal
FTC.
Reserve?
Yes.
Federal Reserve Board.
One of the, when you see this question, right, the giveaway is only mortgage brokers and lenders who are not basically under any other federal regulation like FDIC or something, only those are covered under FTC.
Oh, you're right, because they're still.
Yeah. So basically, if you have a trip, right, you're covered under OTS. So, you know, that's the giveaway there.
Yeah, but they're still that's reserve.
Oh, by the way, those three over there, please remember, actually there's supposed to be four, right?
HMDA.
Z is TILA, X is RESPA, B is ECOA, and C is HMDA. They will ask you what is regulation Z and what is regulation X. Those two are the most important ones. RESPA is, there you go. X is RESPA. They will ask you that. Which one is Z and which one is X.
A loan that has payments that do not tack down principal is a fully amortizing loan, interest only, neg-am pay option arm. This is a tricky question. but the answer is interest only. Okay, even though neg-am technically does it. But the theme of the question, you gotta feel the question.
There's no principle.
Technically, in neg-am, if a person pays a minimum payment, they're not tacking down the principal, right? But that's not what the question's answering. An appraisal is an analysis of the structural components, an opinion of value, a determination of value, or the price agreed to by a buyer and a seller. Okay. Appraisal is always an opinion. You order two appraisals, you're not going to get the same one.
BPO?
Okay.
Remember three comps, three comparables. They will ask you that. Three
Three
comparables.
methods, right?
Yes, for the sales approach, three close comps, three close sales.
Is a referral fee allowed to a broker that refers the loan? Any provider in the SSPL. Who knows what SSPL stands for? Service, the service provider list. When you do the loan as a mortgage broker, you put there how much the title fees are. Okay. Service provider list. To a lawyer that refers the loan, or none of the above unless the disclosed on the HUD and paid for by the borrower's own funds. Answer is none of the above unless it's disclosed on the HUD and paid for by the borrower's own funds. Okay. So I'll give you an example. When we do some commercial financing, sometimes we don't do it in-house. We don't do it wholesale. We tap into retail. Okay. But we can actually get money and get charged for originating the loan. We can provide the services to get the loan application. The money cannot come from the lender. It cannot come from the bank. It has to come from the borrower's own funds, not from a gift. and it has to be disclosed on the HUD 1.